One of the biggest stocks on the ASX has just missed earnings. So is it time to dump it from your portfolio? Plus, a major takeover deal has fallen apart, and now two popular ASX stocks are soaring in completely different directions. But is the market betting on the wrong one? And guess what? One ASX stock has just jumped 19% on massive news. We're breaking it all down in our signature fashion and showing you exactly where the real opportunities are from here. Welcome to Wealth Within's Hot Stock Tips. With over 2 decades of experience training over 30,000 traders, we bring you what actually works in the stock market. Joining me today is Wealth Within Chief Analyst Dale Gillham, and I am Senior Analyst Philip Tortevsky. So let's dive straight in. Welcome, Dale.
How are you, Phil?
I'm great, mate. Great having you again, not in studio, but I'm sure we're going to cover off some amazing things today. Obviously, we've got a huge company, ASX listed company, that has just missed earnings, which is a bit of a rarity in that space. So that is one to look forward to. And then a few major players that are coming out with some big moves that are happening right now, which spells opportunity.
Well, I think today is going to be a little bit more about the contrarian view rather than anything else. Basically what the stocks we're looking at the moment. But it is exciting, and obviously the election happened on the weekend. So that's going to change the investing landscape in Australia, and possibly we know the stock market very much runs on emotions. So it'll be interesting to see what happens over the next few weeks in terms of the emotions of the market and see whether it takes off strongly. But how about we get into that first stock, the big one that missed earnings, and it's Westpac, I believe, isn't it?
Yes, it is. You've given it away, but so Westpac just missed earnings today by 1%. Now I want to bring up the actual announcement itself, if that's possible, on your screen. And you'll see obviously here we've got in the red there, net profit after tax down 1% on first half 2024. Now that is not common when you're talking about the banks. They're always beating expectations or winning in earnings. So I want to get to the chart first here, Dale, and have a look and see whether this news is in fact something meaning it's time to dump Westpac, or it is still a hold for the stock. So we're going to bring up the monthly and the weekly charts on the screen, and I'll get you to start us off by saying, right now obviously the market's coming off a really nice run, or Westpac is in particular, but is now, in light of what is happening, a bit of a slowdown in earnings. Is it time to start seriously considering getting rid of this stock? Because this would be in every mum and dad's portfolio. And coming into what you said with the election, with the fact that our market might be now moving into a period of, I guess, not expansive growth like we would have seen if the situation was different. Is Westpac that stock now that it's time to go?
No, I'm actually liking Westpac. I mean, you got to remember with Westpac, it's, it hasn't broken through its previous all-time high, which is right back in 2015, April 2015. So it's 10 years, and this company has not made a new all-time high. And that you don't see often, but it's also one of those reasons why we continue to say that the market is not buy and hold anymore. I mean, that was very much, last century, if I can use that sort of comment there, whereas, if you could have bought this stock way back in May 2013 and you're still buying it at the same price today. So yes, you've collected dividends, but you don't get rich on dividends. But right now, I mean, even if we just zoom the chart up, we see that previous high there back in February. Obviously, March and April, it moved down with the rest of the market there in that whole scenario where everybody thought the whole stock market was crashing. But this stock only went down 10.59% over that sort of period, whereas the market went, I think it was about 17, 18%, the whole market did. But since then, it's done a beautiful reversal, closing high last month, and so moving up this month. And I really don't think there's anything there to be worried about. If we look at that weekly chart, beautiful move up over the last few weeks, closing higher on each one of those 3 weeks. If we look at that low there, you can see there now that as of last Friday's close, it was up 17.6%. So if the big end of town were worried about this stock and worried about not making earnings, and we're only talking about 1%. And when you're looking at these big stocks, we're looking at the big end of town are looking at that next 1, 2, 3 years on this stock. And obviously with the RBA due to meet again in a couple of weeks, and we are expecting interest rates to come off a little bit, if Westpac can maintain their margins when they do drop, the RBA do drop the interest rates, whether that's in 2 weeks' time or whether that's in another month or a couple of months down the track, they should be able to maintain their margins. And I think this stock will break through and keep going up. So I like this stock for more of a medium-term buy over the next sort of 12 to 18 months at least. So I am liking it at the moment.
Yeah, well, that was going to be my next question. I mean, in terms of the opportunity, because right now there will be some volatility. Obviously, there will be some panic out there in the market. There will be some contrarian views, as you said. Obviously, it's about identifying that opportunity and how bad this really is. But when you go back and look at that chart on the screen, you'll see, this market has been running up since November 2023 quite strongly. And oftentimes you'll see, as you said, the big end of town is forward looking and forward projecting. So if you could on one hand argue to some degree that scenario that has unfolded today has kind of been priced in already, and the market is still quite bullish on it right now with the market, with the month of May closing higher. I would argue that if we can get our head above that February 2025 high, which seems more likely than not, then the all-time high would be the next, level where I guess there could be some selling going on. So, I mean, are you kind of seeing this as a short-term opportunity, a medium-term opportunity, or in fact, as long as it gets above that February high, you're still saying that, hey, I like this and Westpac should roll on over the next couple of years?
Well, basically your last statement I agree with. I think, once it gets past that February high, it's going to roll on for quite a while. But I think what a lot of people watching this video, if you're more new to the market, you wouldn't understand some of the things, because you think announcements of, missing your target, it's bearish news for that stock. And completely the opposite is often true. I don't know how many times I've seen all-time record profits announced by banks and the big four banks, and then falling 15 to 30% after all-time record profits were announced. And you think that would be the most bullish signal that you could get to buy a stock, but it's actually the opposite. That's what I was saying earlier. We're very much in a contrarian mode today. Obviously, with this stock not being at its all-time high, it's still got nearly 19% to go to get to that. I like this stock at the moment for a good medium-term buy. So for super funds, for a good sort of blue chip portfolio to underpin some good growth, it will be paying reasonable dividends. And I think it's not one that's going to shoot the lights out on you, but it's not going to do the opposite on you, I don't think. And I'm not seeing anything on the chart that would make me concerned about Westpac at the moment.
Yeah, and I mean, speaking to that contrarian view, not long ago, recently we had Tesla, which is going offshore, but Tesla came out with, 71% profit downgrade, and all the while its share price over the last couple of weeks, in light of all the negative news, is actually rising. So that's something to keep in mind with what you were saying. But I just want to stick to that point and bring up your book, in fact, How to Beat the Managed Funds by 20%. It is free. You just have to pay the shipping. And, we've time and time said this, that it is a fantastic introduction into the things we do here, into getting your technical analysis on point. Of course, if you would like to get a more in-depth understanding of what we do here at Wealth Within, please do visit the website. We do have a whole bunch of courses out there for you if you do really want to dive in and take your trading to that next level, to the point of where we can, sit back, look at a chart, understand the fundamentals, find opportunities and get in at the right time, because that's the most important thing.
Oh, absolutely. And to me, a lot of people, how do I say it? People new to the market think they've got to be trading small cap stocks and buying in and buying out to make money. But in that book, How to Beat the Managed Funds by 20%, one of the stocks I actually analysed in that is Westpac, and I just show you how you make really good money and better money than most of the people trying to play the market, if I can use that word, over any period of time. And some of these new people to the market, they may make some money very short term with some of these little spikes that they might see, but over the longer term, they'll make far more money by looking at bigger stocks like Westpac and the other banks and some of our other huge big stocks on the marketplace. So just get my book and you'll really start to understand the market a hell of a lot better. But right now, Westpac looks good. The market looks good. I'm really happy about that. I'm just not quite happy about what happened on Saturday with the election, but hey, I'll get over that.
That could be a topic for another day. But look, we're going to move on, and shortly we're going to get into covering off a stock with enormous potential. So sit very tight for that. But next up is Tyro and SmartPay. Now, I want to bring your attention to the screen here because it was announced today that Tyro withdrew from SmartPay acquisition, from the SmartPay acquisition process, as you can see there. Now, Tyro was the front runner, and this obviously news has come out and made a whirlwind for both companies in terms of price movement, especially SmartPay. If we go to the charts and have a look there on the screen. Now, we've got Tyro on the left and we've got SmartPay on the right. Now, what's happened today, Dale, is SmartPay is up 22%. There's been a third bidder that's bid around $271 million with Tyro, the Tyro bid being around 220 to 240, I believe. So they've come in over the top. Tyro have pulled their bid. SmartPay is up over 22% on this news. And right now, you know, you're seeing Tyro, the stock came off a little. I believe it's up a few percent today. But you're looking at both charts, and to me, it's spelling, you know, quite a different opportunity. Obviously, SmartPay is coming off a significant correction since July 2023. It's found some buying interest around these lows, and I would argue a lot of that buying interest is what is happening right now with these opportunities in terms of takeover. Whereas Tyro, rather than break through previous lows like July 22 that SmartPay has, and the nature of that correction, Tyro to me looks more of a sustainable accumulation type move. So I wouldn't write this one out just yet, just because this news might not be deemed, if you will, in some circles favourable. I still like the way Tyro is setting up, which is why, in light of this 22% rise on SmartPay, the market might be just chasing a bit of FOMO right now, or a bit of positive news. And the real opportunity, if Tyro starts to get going from these levels, because we've seen this time and time again, Dale, technically on charts and on stocks, when they do consolidate like this, price starts to get squeezed. Just take back to our market from 2020 to 2024, those huge congestion sideways periods. Eventually, Coles is another example. Over the last 3-4 years, it went sideways for a very long time. Now it's breaking out into a huge trend, and I could reel off another 10 or 20 names that it's happened to very recently. But it's a very normal thing for stocks when they consolidate, after coming out of a significant low through here, not wanting to break lower, holding that previous low. At some point when this one takes off, potentially above $1, you're going to see really nice price action and potential upside growth. Whereas I'm looking at SmartPay and I'm thinking, okay, well, it is running right now, but it's running into where this exorbitant amount of selling happened very recently, and it's taken out previous lows. So really we're coming into where the selling really got going around $1.03. So the jury to me is still out on SmartPay, whereas the bigger opportunity potentially is lining up for Tyro. Now, if Tyro doesn't manage to break through and continue staying sideways, well, that might not be a great thing for it. But we start to get breaks above $1, you need to start watching. They are my thoughts. What are you seeing?
Well, to me, I think I need to caution investors and traders at the moment, because often when you see something like this happen, and obviously SmartPay, as you said, gone up 22% today. And so what we need to remember is that's not, if you're not in this stock already, you're not getting 22%. But what we often see is people see something like this, it jumps, and then they jump into the stock. Whereas unless you own that stock on Friday, by the time the market closed on Friday, you don't get that money because you can't get yesterday's returns. And what would have happened this morning, and I didn't see the opening price, but I'm assuming it gapped up most of what the gain is for today. So again, you should have been in this stock last week. And what I find is a lot of people, they will chase the return and they're thinking, wow, there's a new takeover bid happening. I think it's a binding, is it a binding agreement that they had with this new mystery bidder? I can't remember exactly what I read, but to me, you need to look at, if you're getting in today, how much upside is there for a stock that's in a takeover target? And generally, when we see these types of jumps, because of an announcement. There's not much more upside on it, so you're limiting your upside if you were to get in it from today. That's why I agree with you. I think Tyro is a much better opportunity. Probably not right now, but I think more medium to longer term, I think it's a better opportunity because if you're getting into SmartPay right now, it's a bit of FOMO in my book.
Yeah, absolutely. Totally agree. All right. Well, there you have it. Maybe Tyro is the better option moving forward. But anyway, always do your analysis, and time now to move on to the big mover for today. Now, the stock is called Immutep Limited. The code is IMM. I want to bring up the announcement before we get into the stock chart, if that's okay. And on your screen right now is the announcement that has come out. And I mean, Dale, this is one of these stocks that is in the biotech space. So it's not going to be surprising at all to you why this one is jumping, but it's had a fantastic result in one of its neck survival, head and neck and cancer therapies. And you know, anytime one of these biotech players comes out with the news like this, there is huge growth that comes out, and growth that can be sustained because, you know, with these biotech players, really, it's, you know, they hang their livelihood on whether it's FDA approval or whether it's, you know, getting their drug to market. It really hangs on the balance of that situation moving forward. So when you hear good news about something moving the company like that, then to me, even though you might see the stock jump 10, 20, 30% even in a day, it's not one of those ones just like SmartPay before with that situation. This one here, it's, you know, keep your eye on it and keep looking for that opportunity, because if that momentum builds and snowballs, then you've got a plethora of options with these stocks, which are generally under the dollar. They can get taken over themselves. They can, you know, merge with a bigger partner, and the sky's the limit once they get going. So this is huge news coming out of IMM. We're going to get to the chart in a second, but I just want to get your thoughts on this particular sector, the biotech space, because you did mention earlier, you know, looking at those big, safer stocks is the safer play for the investor and trader out there, which I totally agree with. But sometimes when you get this kind of news coming through, it's worth having a good look, isn't it?
Oh, look, it is. And I mean, you know, we are working with the team at the Microcap conference that happens every year in Melbourne for 13 years. And we see biotechs every single year. And I've seen quite a few of them present and watching their share prices over time. And obviously the key to this and for that long-term sort of good investment, if you like, if I can say that, is to understand all that, because this was just some good results from a trial phase. So one of the different phases is you need to understand the marketplace that's happening at the moment. The good news is they're working with Merck, and that's one of the biggest pharmaceuticals in the world. It's one of the big American pharmaceuticals. So it's their drug in concert, I suppose, if you can say it that way, with a drug for Merck, and they've been getting better results, or a lot better results from using these two drugs, as you said, for head and neck cancers. But I'd really want, if you're an investor, you really do need to get into the company's website and have a really good look at their timeline, because obviously it's got to go through more trial phases. It's, you know, the human trials, all the other bits and pieces that it's got to go through, FDA approval, and that could be 5 or 6 years away, or it could be 5 or 6 months away. I don't know. I haven't read all of that, and I don't intend to read all of that. But if you are interested in this company, you really need to get into that fundamental side of it and actually look at what the research is, what their timelines are, what their funding is. Are they getting more funding? Do they need more funding? And this is the critical end of this. Well, this is sort of that lower end of the market, as you mentioned. I mean, this is quite a liquid type of stock at this point in time. But, you know, if you put your plain money in, and to me, this is it's at the stage where if you put some money in and you went, well, if it doesn't do well, I don't care, then that's the good attitude to have with this stock. But don't go into it thinking it's going to shoot the lights out for you over the next 3 to 6 months, because just like we saw with, you know, SmartPay, it's gapped up today on this news. And again, so it's already happened, the jump. So it might continue on, but it may not. So don't just jump into it thinking you're going to get this another huge rise over the next couple of weeks. So do your research first, and if you like the industry it's in, if you like what it's doing, if you like the timelines, etc., and the fundamentals stack up, I think I'd go for it.
Yeah, and this is why, I mean, another feather in the cap of why looking at the price action, because oftentimes you'll see the price action lead coming into certain announcements, or, you know, sometimes the price action will just start getting hot without any news and then for the news to come later. But if we do look at the chart of Immutep right now, to me, this is the exciting part, because yes, I would totally agree with you from the point of view that, you know, just trying to play these stocks, if you are looking to have a, I guess, fun account, sure, but I think you can also take this space seriously if you are experienced in analyzing price action. And that's where the huge advantage comes in being able to read these charts, because, you know, as our students would know, when you do see certain things unfold, you're able to capture on that with much more confidence than just playing the guessing game, if you will. So, and relating that to this chart right now, I'm seeing something very significant develop. And that's something that hasn't happened in fact, throughout the history of this stock. And what am I referring to? I'm applying one of these trend lines here that we do teach, that you can find in the book that we mentioned earlier. So please, if you do want to get involved, have a look at that. But it is breaking through this long-term momentum line for the first time in over 20 years. And that is not insignificant. That is why, to me, this opportunity is more than just a sniff or, you know, a play idea. And so we broke through back in May 2024. What you'll often find is stocks, they do hold on these momentum lines. And to combine that with the fact that there has been a major level of support at 23 cents that this stock has held since April 2015. Now, we've broken a long-term momentum. We've bounced, or we seem to be bouncing off support in April 2025. If this stock can get above 50, 60 cents, I think it's really at the point where there is a huge potential turn in the corner long-term, given the way it's accumulated through here for all these years, given the way it's coming out of this contractionary phase. And on the weekly chart, we're up 19% today. We've actually taken out the most recent, what I would call level of resistance. If we can hold and close above these levels, then to me, this is an opportunity worth watching seriously. But I do take your point from the view that it is quite an illiquid stock. So you do need to be aware of how to, I guess, navigate through that type of price volatility and price action, because you're going to be dealing with widened spreads. You're going to be dealing with, you know, not liquidity in all levels of where you want to transact, which is going to affect where you can buy and where you can sell at the end of the day. So if you are on top of all of that, then hey, go for it. But did you want any last thoughts on this one, Dale?
Look, I think what I want to say to people is, if you're going to get in stock like this, expect volatility, both upside and downside. If you can't handle that, don't trade it. Simple as that. And the second thing is, you don't have to worry about eking out the last dollar of profit or trying to get in at the lowest price. I'd be happy to give away 50 to 100% on the bottom of this one to make sure it's through some of those resistance levels that you talked a bit about, because there is literally hundreds or even thousands of percents gain in this type of stock if it is good fundamentally, like I was talking about before. So you don't have to rush into it. You got time to do your research. There's plenty of upside potential if this is a great stock in that biotech type space.
Yep, great stuff. All right, now if you want more hot stock tips, check out our video, 3 big ASX stocks on the move.